What's going on, everybody, and welcome to the video. Mullen is doing absolutely incredible today. We're going to be talking about what is happening to Mullen. The cost to borrow is going up at insanely fast rates for short sellers, which does almost give us potential for a short squeeze. You remember, there is no guarantees, and whether you're in Mullen for a short squeeze or a long-term play, my purpose of this channel is not to just only provide information on one side. I'm just trying to be here to show you the whole story. So if you do enjoy this type of content, make sure to subscribe to the channel and turn on post notifications so you don't miss out on any of my future videos. Let's go ahead and get straight into it. If you don't know the stock already, ticker's MULN, trades for just below 29 cents a share right now. They opened the market at 25 cents, went all the way up to 30 cents, and now they're trading about 28, 29 cents, staying relatively flat over the past few hours. But let's go ahead and look more into Mullen. It's up 9.36% today, up 30% over the past 5 days, and up pretty much 52% over the past month. There's a lot of talk. This company is now worth $479 million. Another thing I wanted to point out that was pretty important is the earnings date. It was recently supposed to be this week, but then it got pushed to possibly next week. So that could be very interesting to see how these earnings come up with their new deliveries and things like that. It could be very bullish information and kind of almost squeeze these short sellers out of their positions per se. But to show you a little bit more on the short interest and why this is so big, right now the short float is about 11.21%, which is definitely very high, and a short ratio of 0.83, so it's not the highest. Let's go ahead and talk about this big news. Mullen stock heats up as cost to borrow rises. Just to give you a few key things on social media, a lot of talk. Bullish traders of the embattled enterprise discussed the possibility of an upcoming short squeeze, caught a lot of attention. Furthermore, Fintel notes an extraordinary rise in the short borrow fee for Mullen shares. From Fintel on December 27th, so just the other day, the borrow fee was 9.65%. Then at the start of yesterday, it hit 156.76%, and then it went all the way up to 281.79%. So I will go ahead and show you these numbers. First up, last update from 25 minutes ago, which was technically like an hour and a half ago, when you include this 58 minutes, short shares available hit 0, has not hit that in a very long time. I mean, you can just see one from 600,000, 450,000 to 0 short shares available to be shorted. And then here is those borrow fee rates. You can just see from 9.8, 9, 8, 9.6, 156, all the way up to right now at 313%, which is a very, very high short borrow fee rate. It almost causes, if you are in this for a short squeeze, it almost causes like Mullen would have to drop at incredible rates for this to truly be a profitable play if they hold on for the long term and just continue having to pay and pay and pay this short borrow fee rate, because 313% is no small amount to pay. Now, I also want to talk to you guys about this for Mullen. Dear Mullen stock fans, mark your calendars for January 19th. So this is also very big. Mullen will try again to get approval for a reverse stock split on January 19th. Mullen needs a lot of cash to fund the productions of its EVs. So as we saw, they went through this reverse stock split. They tried to get it approved, but an attempt to win shareholder approval for a lack of quorum. Most shares that were voted supported the proposal, but the vast majority abstained, meaning that they could not really confirm because there was just too much things going on. Mullen has until March 6th to get its price above $1 a share or face delisting from the NASDAQ, but it could get a 180-day extension depending on how things go. So what they want is they want to get that 1 to 2 to 1 to 25 reverse stock split to keep their price above $1. And also on March 6th, if they can't get that $1 share, Mullen faces a May deadline to remain part of the Russell 2000. They were added to the index last June, and in order to stay on that index, you need to be above $1 a share. So that's another reason why Mullen wants to do this. They can stay in the index. It makes being on the NASDAQ just kind of makes it easier for the company. And I know it might dilute shareholders sometimes, but it does make it easier for the company to raise cash, which does seem like they need in order to continue operating their business the best that they can. So also, to close this article off, there remains hope, which is why Mullen was up 10% in the early trade on December 29th. BlackRock continued to buy Mullen in the third quarter. The company has made deliveries of a vehicle on the IGO in Europe. There's a lot of talk about, Mullen went ghost, what happened, but it seems to be that they've made some deliveries. And the company recently hired 2 executives with experience at GM and Ford Motor. So these are definitely very good. You want to have your team because the managers are the ones who are making the business like what is going on in the business. So you definitely like to see that experience, which is a very good thing to see, especially on a newer company like Mullen, who is just trying to barge their way into the market. And they already have made some very good things happen for them. You know, the deals, the acquisitions that they're doing right now, the partnerships is very, very good. And let's go ahead and talk about this. I want to talk about the institutional ownership that's been going on in Mullen is just absolutely absurd right now. Okay, you can just see shares change. Almost all of these are going to be positive. A lot of people just adding shares, big amounts of shares, Fidelity. We got new shares coming in from BlackRock. A lot of different things. I mean, you barely see any red. Of course, it's going to be a little bit of red, but all of these numbers are positive. And this is a very, very good thing. And that what that is the shares change. So that means over the recent reporting, Q3 of 2022, what we're seeing is people are buying into Mullen. Vanguard, we've got right here. So this is very interesting stuff. The Russell 2000 ETF, but it's a part of the fund. So BlackRock buying more. We're State Street buying. I mean, this is a good sign. You know, investors aren't just spending money to lose money. They're buying this stock because they believe in the company per se. They believe in the upside potential. And Mullen is definitely one of those companies trading with just below $500 million right now. Could be huge. I mean, the EV market is absolutely massive, but that is going to wrap it up for this video. So if you did enjoy it, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any of my future videos. Thank you for making it to the end of this one, and I will see you at the next video.